key with value investing is we don't have an information edge. We have an analytics edge. Okay, so it's not that I'm able to know some inside information about the funeral business. That's not where the issue is. The issue is that for me, the key thing there was I concluded that this was a great business in a bad capital structure. Can it withstand that capital structure and transcend it? That was the question, right? And so I was able to do the work to figure it out. So it's usually we have no information edge, we have an analytics edge, and that can, I mean, like for example, the largest position I have right now, I don't talk much about my current portfolio, but the largest position we have is Micron technology. It's in the memory business. And for the longest time, the memory business for decades was a terrible business. Boom and bust, too many players, someone innovates, cuts their cost in half. Now all your inventory is, the price of your inventory is above the selling price, and you're losing money while they're making money hands over fist till you catch up. And maybe you can catch up or maybe you don't. And it was all of that going on, Moore's law and, prices declining, till we hit a point where we were left with three players. And we got left with, I think, three rational players. And the game changed. Now, everyone saw that there were three players, but they had so much history and pain from the decades in the memory business that they refused to believe that anything was going to be different. And my thesis about 3-4 years ago was it's completely different. So the thing is that if you look at a Amazon data center, and if it costs them, 200 million or 100 million to put that up, about 30% of that is going to the memory guys.
Wow.
So it's a tax on all the streaming, all the e-commerce, all the shopping, on everything. 30% tax. I'm sitting collecting the tax.
It's a bit like NVIDIA for the artificial intelligent blockchain game. No matter where the future goes, you need an NVIDIA graphics card to run it, right?
Yeah. And so I think the thing is that now, it's in an industry with rapid change. So we'll see, the thesis is still playing out. We will see how it works. But I like the, upside downside scenario.
10 years ago, India's food delivery space was wild. Just like Pabrai talks about the cloud storage wars, where only a few players survived, and Micron emerged as one of them. The same thing played out in India's food delivery space as well. Between 2015 and 2018, nearly 800 to 1,000 food tech startups popped up. Tiny Owl, Food Panda, Scootsy, Runner, Tasty Khana, Just Eat, Uber Eats, you name it. Investors were pouring money, and a founder once joked, in 2015, just say food tech and you would get funded. But the industry changed faster than it grew. Burn rates were high, profits were low, and one simple truth kicked in. Growth is easy with money, survival isn't. By 2020, almost every big name shut down or got absorbed. And today in 2025, it's straight duopoly. Zomato and Swiggy controls 90 to 95% of India's food delivery market. What was once battlefield of 1,000 startups is now two-player game. In winner takes all market, only the strongest survive. So this is one of the best recent examples of how fast-changing industry where hundreds of startups entered, but only two giants survived, Swiggy and Zomato.